Hey guys, Nick here from Nick's Taxes. In today's video, we're gonna do something a little bit different. Now, back in March, I made a video making some stock picks about, talking about stocks that I thought were gonna grow during this whole economic uncertainty. If you remember, back in March was when the stock market reached its lowest. Obviously, we didn't know that at the time, but we were going through that huge crash, and I picked a couple stocks that I thought were going to weather that storm. And so today I want to review those stocks that I picked and see how they're looking today, 6 months down the road, and compare them to the stock market. So I'm Nick from Nick's Taxes. If you're new to the channel, thanks so much for joining. I make videos on personal tax, personal finance, and investing. So if those are things that are of interest to you, I recommend subscribing, and then also throw a like on this video while you're at it. It really helps my channel grow, and I really appreciate that. So to start, actually, if you haven't watched that video, I'm going to link it here. But go check that video out. Go listen to my stock picks, my reasoning. Just bear through my lack of enthusiasm. It was one of the first videos that I made. And talking in front of a camera is hard. So yeah, go watch that video, come back, and we'll do the whole review. But yeah, I'm gonna jump right into it now, and let's get started. All right, so the first stock that I picked in that video was Zoom Communications. Zoom at the time, back in March, was selling for $126 per share. Now in September, it's selling at around 408 at time of recording, which means it's grown about 223%, which I think is absolutely crazy. I never would have guessed that. The one thing though that I thought was interesting was back when I made this video, when the stock was $126, I thought that was quite overpriced. It had a really high PE ratio. And now that PE ratio is even higher. It's around like 500, which is absolutely insane. But sometimes stocks aren't rational, and the demand for this stock has been crazy. A lot of people have been investing into Zoom, and a lot of just your regular Joe Blow investors like you and I have been taking their individual investing accounts and putting money into Zoom, which is absolutely driving the stock price sky high. It's gone to the moon, and I don't know if it's going to slow down at any time soon. Zoom is one of the main communication, webcam development softwares that a lot of businesses are using these days to communicate with everyone working from home, with people doing things virtually. Zoom is the main company that allows us to interact virtually. So Zoom's here to stay, and Zoom at that point, when it was 126 bucks back in March, had skyrocketed from $60 at the beginning of 2020, and now it's at 408. Absolutely insane. So if you went in and you bought some Zoom at the beginning of the year or back in March, hats off to you. You made a crap ton of money. Great job. All right, the next stock that we're going to look at is Amazon. Again, with the pandemic, I thought Amazon's price was going to go up due to an increase in demand for buying things online and getting things ordered. And I believe I was on the money with that one as well. We've seen a ton of demand through Amazon. We've seen all these delivery companies be absolutely overwhelmed with the amount of deliveries that they need to send. And a lot of people obviously are using Amazon to buy their products instead of going out to stores. So back in March when I made the video, Amazon was selling for $1,880 per share. That's in USD. And now the stock price is selling for $3,078, which is an increase of 63%, which is quite good. Again, if you bought Amazon at that time, I think that was a fantastic time to buy in, as we've seen Amazon again fully recover, and they look as strong as ever right now. So even In today's market, Amazon I think would be a stock to buy. But if you did it 6 months ago, again, hats off to you. Next stock I want to look at is Kirkland Lake. Kirkland Lake, when I shot the video back in March, was $39 per share in Canadian dollars. Now it's selling for around $70 per share, which is an increase of 79%. Kirkland Lake is a gold stock, and gold just recently had all-time highs. So any stock that's affiliated with gold likely skyrocketed as well because the price of their product, increased exponentially. So if you have any type of investments in gold stocks or in gold itself, you are sitting pretty right now. A lot of reasons, like I said in the March video, are true today, whereas there's a lot of market uncertainty going on right now, and gold is one of those like defensive stocks where people will take money out of other stocks and throw it into gold as kind of like a safe haven. And I think this happened even more so in the last couple months. It's more recent when Warren Buffett decided to invest in gold. And when Warren Buffett does something, the investing world takes notice, and that's what they've done as well. So a lot of people are now moving into gold and are looking at gold stocks. And Kirkland Lake is one of those quality stocks. But now a lot of people, because Kirkland Lake's grown so much, they're looking for the next Kirkland Lake. So again, if you bought in back in March, you're sitting pretty with that position in Kirkland Lake. I still personally think Kirkland Lake is a quality gold stock to have, but right now with those all-time highs, I think we've seen it reach a quite nice of a peak. So I would say there's a whole lot of value there right now, but gold is definitely something that you might want to have in your portfolio for diversification reasons. All right, and the last stock that I had, stock pick number 4, was Dollarama. This was again another Canadian stock. It was selling for $39 Canadian, and now it's selling for about $49 Canadian, which is an increase of around 25%. The idea behind Dollarama was looking at the last economic recession that we had back in 2008. Dollar stores in the US, their stocks did well during that time. They weathered the storm and all that kind of stuff. So I was looking for a similar type of situation here in Canada, with all the economic uncertainty going on, people losing their jobs, all that kind of stuff. I thought Dollarama would be a great stock, and a stock where we'd see this company really increase their sales, increase their revenues. But I don't think that these last 6 months kind of went as much as I expected. We had in Canada the CERB. So, a lot of people may have lost their jobs, but they were kept afloat through the Canada Revenue Agency, throwing them $2,000 checks every month. And the stock market, while we were facing a lot of, unemployment and a lot of, economic uncertainty, a lot of the stock market, like we've seen in these last couple stocks, the stock market has absolutely blown up, which I don't think anyone could have expected that. And it's not really in any correlation to the actual economy. So while, I think Dollarama is a good stock to have during some sort of recession, the stock market is not reflecting any sort of recession right now. So I think Dollarama actually right now is still a good stock to hold on to. It went up 25% in 6 months, which is really good. But I think if we face more of a downturn in the market and in the economy, a stock like Dollarama is one that you're going to hold on to. Okay, so to recap, we had Zoom increasing at 223%, Amazon 63%, Kirkland Lake 79%, and then Dollarama 25%. I'd say overall those are pretty good numbers, but those numbers don't mean anything unless they're compared to something. So I took a look at the last 6 months, the total return of the S&P 500, the Dow Jones, and the TSX to see what was better. Did the stock market as a whole grow more than my stock picks, or my individual stock picks better than the market as a whole, and then we can see, you know, just how good these picks were. Because if everything's going up, you might as well just throw a dart at the board, pick that stock, and you know it's going to go up too. You want to look at stocks that outperform the market as a whole. So the S&P 500 and the Dow Jones since March has increased 40% to me, which is absolutely mind-boggling. So 40% is the return for those markets as a whole, and then the TSX, the Toronto Stock Exchange, grew 38%. Now, if you would have told me back in March that the stock market would increase 40% in 6 months, knowing everything that's going on, I would say you're absolutely crazy. But hey, the stock market, like I said, is irrational. It doesn't make sense sometimes, and you know, if you invested at those bottoms, hats off to you. You've made a good return. But going forward and, you know, looking into the future, no one knows what's going on, so it's important to do your research, pick stocks that you believe in, pick stocks with strong balance sheets and a good economic outlook, and, you know, kind of go from there. But these last few months and these stocks that I picked, I think did quite well, and it kind of gives me assurance and confidence that you know, I'm able to pick out a couple of good stocks. So hopefully in my next stock pick video, I can have, and we can have, similar results. If you have these stocks, any of these 4, let me know in the comments below, and let me know when you bought them. I'm interested if anyone, you know, took my advice back in March. And that is all for today's video. If you got value out of this video, please give it a thumbs up. I'd really appreciate that. And consider subscribing, and I will see you guys in the next video.